Good day, everybody, and welcome to the Ronel Talks Money Show. Now, today I have somebody very special with me, and we are going also to talk about something quite special, and that is gold, investing in gold. Now, I have David Melvill with me. And like I said, he is really passionate about gold. So it is actually amazing to listen to him about sharing his passion. But just to tell you or to introduce David to you and just share with you a little bit of his background. So David was at Sanlam for 9 years, where he rose to the rank of branch manager. And then he joined a new company, the Financial Hub, as a founding member in 2002. He has practiced as an independent financial advisor for the past 26 years. He then moved into the specialized field of managing monies. He believes in the principle of diversification of assets, and that is exactly what we're going to talk about today. In addition, he has a passion for gold as money, the purest form of money. He sees the value of investing in gold still in the ground through the gold mining shares, as these are leveraged and can give excellent returns when the fundamentals are in their favor. David is fascinated by the history of gold. He loves hiking in the mountains, good red wine, and pizza, as well as the joy of being alive. What a wonderful resume. David, thank you so much for joining me today.
Thank you, Ronel. It's very special to be part of your Money Talk show, and I really appreciate the invitation. Thank you.
David, now let us kick off, and you can maybe just share with us, how did you get into gold? Where does this big passion for investing in gold started?
You know, I think back fondly to a man called Peter George. Now, Peter George was an economist who had a passion for gold, and he took it upon himself to invite us once a week to his boardroom, a small group of us, and he tutored us in the, I want to say, contrarian economics, and particularly understanding the role of gold in the economy and how essential it was as pure form of money.
Right.
So it was really his mentoring, his encouragement that meant so much, and caused the desire to learn as much as I could about gold.
That's awesome. Tell me, David, I think all of us, we know that when we listen to the news or we open the newspapers, you often see the gold price being quoted. But you do find that gold is maybe not that popular an investment for the general man on the street. So maybe you can just share with us in layman's terms the process about investing in gold. What is it all about?
Right. So now, just to comment briefly on your initial statement there, you're quite right. There are definitely two schools of thought. Those that love gold and are passionate about gold, and those that detest gold, almost hate gold, and wish it away. But yeah, if one then decides you see the value of gold and you want to invest in gold, probably as South Africans, the best way is to invest in Krugerrands. Krugerrands were founded by South Africa in 1967. They were the first country to initiate having a 1 ounce gold coin. Subsequent to that, many countries have followed: the Canadians, the Americans, Australians, the Chinese, and the Brits. So there's a wide variety of gold coins available, but still the most sought after globally is the Krugerrand, probably because it was the founding Krugerrand or gold coin that was brought onto the market. So there are two ways of acquiring Krugerrands: either the wholesale basis, where one would buy them directly from the Rand refinery at the very best possible price. But as individuals, we can't buy there, so only management companies or companies that have a license can acquire there. But through a company called SA Bullion, I prefer to buy my Krugerrands because they undertake to manage your investment. So they will buy it at the best possible price. They will insure it through Lloyd's of London. They will vault them at the Rand refinery for you. They ensure there's an annual audit to verify that your coins are there. And at any stage, if you want to sell, you pick up the phone or you send an email, and within 72 hours, the cash value of the Krugerrand that you sold is reflected in your bank account. So it's a very efficient way of investing in gold, as well as then making sure that the cash is readily available. And it's important to know that there is what's called the South African Reserve Bank buyback guarantee. So they undertake, whatever the situation may be, to buy back your Krugerrands from you. Then, of course, the other way is the retail investing, where you would go and visit a coin shop and buy a Krugerrand over the counter. Now, typically, you would pay probably double the cost to acquire it because they've got a lot of expenses in terms of staff and rental and ongoing costs. So that's understandable. But then you take possession, and then you would have to do your own insurance and manage your own risk. So those are really the two ways of acquiring Krugerrands. Perhaps just to say that Krugerrands has been a magnificent investment. Over the last 20 years, they have yielded 15% per annum. So there are not too many investments that have been so consistent and so relatively low risk, because really if you're buying a Krugerrand, you're comparing it with money in the bank as cash on call.
Yeah, David, that is absolutely a magnificent return, and like you said, it is low risk, so you are not taking on a lot of risk to receive that return. But tell me, I know they say there's 3 different options in terms of how you can invest in gold, so maybe you can just touch on that.
Yes, no, thank you. I just focused quickly on Krugerrands because it's perhaps the most easiest one to invest in. But, you know, there are investment in gold bars. And many people would say, well, why spend all the manufacturing costs for a Krugerrand? Because there's a lot of artwork and it obviously does cost you more. But in South Africa, if you buy a gold bar, you have to pay 15% VAT because it's like any other commodity. But if you buy a Krugerrand, it's exempt because it's deemed to be legal tender. Let's call it money. And so that makes a significant difference when you make an investment and you lose 15% straight away because you bought a gold bar. But if you buy gold bars overseas, and we do encourage investors that want to take money offshore or have money offshore to actually invest in gold bars either in Dubai or in Zurich, Switzerland. And there the manufacturing cost, as I said, is half the cost of what you would pay for a Krugerrand. So there's significant savings. And also the management, because we like to vault them in Zurich, where it's the safest possible place. And then that way the costs are also minimal, at least half of what you would pay in South Africa. But it does have an entry level of $25,000 that one needs to have to be able to make an investment in offshore gold bars. And look, there's also the gold exchange traded fund, which is really just buying something that's a listed instrument. It's also very liquid, buy and sell. But perhaps my more favored way of investing, if you want to take on more risk, would be actually to buy the gold shares. So the gold miners, companies like Anglo Gold, Harmony, Sibanye Gold, Durban Roodepoort, Deep Gold, all well-recognized, established gold companies. Of course, the risk is so much higher because a lot can go wrong with gold mining, but the return is significant, especially with a rising gold price. As the gold price rises, so the profits become greater for mining companies because they have basic fixed costs, and any increase is then pure profit. So that does give a leverage. And any stockbroker would be willing to buy those shares and just add them to your portfolio for you. The other option is using the Old Mutual Gold Fund. It's the only unit trust that specializes in gold, and that would have roughly 70% South African gold miners and 30% offshore gold miners. So it's a nice basket of gold miners. They too have done exceptionally well the last 2 years. I say the last 2 years because the 8 years prior to that were disastrous years and really tough while the gold price was low. But for instance, the last 2 years, they've yielded in excess of 200% for their investors. So really a place, if you understand the risk, to be looking to maximize your yield.
Okay, that sounds great. David, now we've mentioned now about the gold price, and we often hear the gold price, we often see the gold price in newspapers or financial magazines, but how is the gold price determined?
Okay, that's a good question. So it's actually a group of 5 investment gold bullion bankers that meet together twice in a day, 10 o'clock in the morning and 4 o'clock in the afternoon, South African time. And we use what we call the London fix. They then devise what the price should be for a portfolio of gold that's either going to be purchased or sold. And that's what they give as the signal as the London fix. So that literally is the dollar price of gold. Then the next morning, if you were buying a Krugerrand, they would then use the 8 o'clock price of the Rand dollar exchange rate. So whatever the Reserve Bank deems the exchange rate for the Rand, how many Rands per dollar, would be what we call the exchange rate. So that exchange rate multiplied by the London fix gives us what we call the spot price of gold. And then if one's wanting to buy a Krugerrand, the Rand refinery together with the South African Mint have a process of refining of the raw gold, as well as then turning it into a blank coin and then ultimately striking it into a Krugerrand. That costs you an extra 4%. So that's the value add that is added to some raw gold.
Okay, and then what are the factors that can actually impact on the price of gold?
Yeah, no, that's a very good question too, because there are many factors that can impact. And I would like to say supply and demand, as in most other commodities or things, is prevalence. You know, if the gold mines are not mining a lot of gold because it's not worthwhile, there'll be very little supply coming on stream. And then you would actually have to start recycling a lot of old gold, melting down jewelry and things to try and acquire some more gold. So if the supply is small, the price goes up. If there's an oversupply, the price will go down. I think that's more or less where we sound things. So a lot of South African mines are old mines because they haven't spent the money to develop new mines. They've rather gone deeper and deeper, and we go as far as 3 or 4 kilometers underground to get to that gold, which we tend to think is cheaper than starting new gold mines. But of course, it's very expensive. One thing that costs gold mines a lot is electricity. And it's not to keep the lights on, it's to keep the air conditioning going. Because some of those workers are down there at 40% Celsius temperature, so it's really boiling for them. And they have to spray them with water and ventilate adequately. Yeah, so South Africa hasn't had the appetite for developing new mines, unfortunately. So that's supply and demand. Then the monetary policy. I think you're aware of countries like America and the European zones where their interest rates are 0. And many other countries are even gone into negative interest. So like Japan and Switzerland have negative interest rates. So where the value of money loses its attraction, gold then arises to the occasion. Because why would you put money in your bank and get a 0 return? You'd rather own some gold, which you know is going to give you no dividends or no interest, but its capital appreciation is going to be very good. So at the moment, this monetary policy expressed by many countries is rather bizarre because it's all focused on how can we give some more stimulus to the economy. So that does play into the hand of gold investors because the gold price then tends to rise and you're not forfeiting or losing any interest because there is no interest available if your money was sitting in the bank. I suppose things like geopolitical tensions that arise is another factor. So if, let's say, things are going wrong with North Korea and there's a lot of hiccups, or in Iran or Iraq, there's unrest, then the gold price will also tend to run based on the problems that are being experienced. So typically, investors look for insurance and they buy gold when they say, the norm is not good at the moment, let's buy something outside of the recognized typical instruments and have some gold as our form of insurance. And I suppose then also when you see asset prices like we're seeing at the moment, property prices, stock market prices, even bond prices, they don't seem to have much relation to how things are going. You know, things are not going well, and yet the prices are rising. So there's this disconnect. Share prices are booming, but companies are not making profit. They might even be making losses. But there's so much money chasing after these shares that they're artificially propping up the companies' share prices. So when people get fearful and they say, this is not really sustainable, rather give me back my money, sell my shares, and then they go buy some gold, which is really the antithesis of the rest of the market. I suppose another factor is inflation. Whenever people see inflation coming along and rearing its ugly head, they tend to buy gold, because they know gold is a really good investment of protecting your currency, which is being debased or depreciated. So that's a very popular one at the moment, where they know central banks are expanding the monetary policy. They're saying this is a good time to be owning gold. And you also see that central banks are owning a lot of gold. There was a time when they were selling gold, now they're buying gold. We saw last year a country like Poland bought 100 tons of gold to protect their currency and their economy. So whenever we see currency weakness, particularly dollar weakness, we see the price of gold will run too. I suppose too, when times are uncertain, like we're seeing, global instability, where we're going through recession and potentially depression is looming, people will definitely say this is the time when we need to protect ourselves with some special insurance, and the only insurance really is gold. So lastly, perhaps there's some intangibles, which are perceptions, preferences, and market sentiment that would also cause people to start to buy some gold. Hope that's enough factors that influence the price of gold for you.
Yeah, no, that is actually interesting, and I think that is obviously what people should be aware of if they are going this route. That they know what is really impacting on their investment. But what would you say is the biggest difference between gold and your other asset classes?
Yeah. So perhaps coming back to my theme, gold is money. Yes, it does look like a commodity like copper or platinum, but actually it's not. It is the purest form of money. Central banks don't keep platinum or copper or any other metal. They only keep gold as their safe haven, as backup for their currency. So gold is really an essential part of any portfolio because it's the insurance. So when the other sections of the market, whether it be share portfolios, property, or bonds, are doing well, nobody really needs gold. So you would just keep a small portion of gold in the portfolio as an insurance to things going wrong. But as the times change, there's a swing away from the traditional assets into more gold as the allocation as the insurance. So I would say, the protection is key here. Why one would want to have pros for investing in gold. And I suppose too, there's a fancy word called uncorrelated. And that's actually quite crucial to understand. So gold is uncorrelated. If other asset classes are falling, gold doesn't fall into the same camp. If anything, it is rising. It does the actual inverse relationship to traditional assets.
Yeah, David, I really like this factor because I believe, and that just emphasizes how important it is for any investor that you are on top of your game and that you educate yourself about these things, because you need to know kind of like in what's happening in the markets out there, what's happening with the economy and all of that, in terms of, when you need to change your investment strategy. And like you said, now we can maybe go lower on gold and maybe go into some of the other investments, but at a certain point we want to go back and increase our investment in gold. And there's absolutely so much, and it just shows you that you cannot really just invest and then just forget about what you are investing in. You really need to review your portfolio on a regular basis. But then also tell me, there are a lot of scammers out there, and I think we've seen specifically during the lockdown period, when a lot of people were really desperate, that you've seen a lot of scams coming through. But how can people ensure when it comes to investing in gold that their investment is legitimate and it's the real deal and they deal with authorized person or company when it comes to investing in gold?
Yes. So I would think, the best way is to buy from the Rand refinery, because you're buying from source. And there's no ways that would have anything else outside of what's going on. So yeah, wholesale pricing, and then recognize coin dealers. They have various mechanisms where they weigh the coin, they measure it, and can study it. So there are some folk that have tried to improvise and bring out a lookalike Krugerrand, but it has failed dismally, and it's very easy to just take a look at the fine artwork and you can realize quickly, this is not the genuine item. So it's unlikely you get caught, but there are a few of them circulating there. And I suppose the easiest is just to look at Paul Kruger's beard or look at the horns of the springbok, and you can see those two things give it away quite easily.
Okay, that is so interesting. And David, if you now want to start investing in gold, what is the process that you can follow, and what is the minimum investment requirement?
Yeah, so Krugerrands do come in different sizes and shapes. The traditional one, and one which is quoted mostly, is the 1 ounce Krugerrand, which costs somewhere in the area of 33,000, just roughly speaking today. But then you can get a half a Krugerrand, a quarter Krugerrand, and even a tenth. A tenth would probably be just under 4,000 Rand. Obviously, there's a bit more artwork with smaller coins, and you're paying a little bit of a premium. But at least it means it's affordable for the man in the street to own a little piece of gold. And you don't want to have a clump of gold. You want to actually have a little coin that you can easily trade and people can recognize and be willing to give you the cash equivalent for that. So there are a lot of Mandela coins out, and unfortunately, they have not done the market any favors. And they were marketed on the basis that one day Nelson Mandela is going to die, and then these coins are going to be scarce and they're going to really be worth a lot. But unfortunately, they've paid too big a premium for them, and that's not the case. So one must be careful about buying those. Then there's also what's called a proof Krugerrand, which is like a mint one. It's not been handled, it's sealed, it's got a few special features, it's got a more shiny presence, and instead of having 160 splines, it has 220. But then they want to charge a premium again for that, and I say no. We really want to buy gold for its gold value. We don't want to pay any numismatic value. Sure, there are people that collect special years, but in the end of the day, our investment is in gold, and we want the closest to the spot price of gold. We don't want to pay any premium as such. I think gold bars is dangerous because it could be a titanium gold bar that's been wrapped in a bit of gold plating. So you've got to be very careful that you get the certification and only buy from recognized dealers if you wanted to buy a gold bar. But for me, gold bars are for jewelers. They're not for us to invest in, because jewelers will melt them down and use them.
So, but I think there is also sometimes a perception that you need a lot of money to be able to invest in gold. But then what you are saying now is that you actually can start small and start with the minimum investment, and you do not really need a lot of money.
Yes. Sorry, I did disappear a bit there. Yeah. So I would say to buy one Krugerrand, if you're going to buy it through a company called SA Bullion, they would need, say, quarter 35,000, which would buy the Krugerrand and leave some money for the management thereof. But then there is quite a big second-hand market too. So people would say, listen, I'm willing to sell you my Krugers, but I think you need to know who you're dealing with. You don't want to go and buy it through Gumtree or one of those places. You set yourself up for failure because you don't know who you're buying from. So the credibility of knowing who you're dealing with is paramount.
And then once you have your gold now, then obviously you need to have a way for safekeeping and insurance. So maybe you can also just touch on that, please.
Yeah. So SA Bullion, I said earlier, buy it at a wholesale price. So typically it would be 1% for SA Bullion and 1% for the advisor. And then they would vault them at the Rand Refinery for you. They would insure them through Lloyd's of London and have an annual audit by Deloitte & Touche, as well as manage your monthly values, give you a quarterly report, a good, well-written article about what's happening in the gold market. And for that, they would charge 2% plus VAT. But if you were to go and insure your Krugerrand, on your own insurance policy, you'd pay way more than that. So it's really a good deal that they're offering. And that's my first price for encouraging investors to do. Don't take possession if you don't need to take possession.
So those are obviously some of the costs that you need to consider, but are there any other costs involved?
I don't think so. So when you sell your gold through SA Bullion, you get the spot price of gold. There are no exit costs to sell. You're only paying initial costs to acquire. So you guarantee the spot price of gold, whatever it may be on the day. In the second-hand market, if you go back to a coin shop, they typically only want to pay you the spot price of gold too. If you're able to do a bit of a trade with a willing buyer, willing seller, then you can get spot maybe plus 2%. And that's what I try and help investors get a little bit more, because we know intrinsically we're not buying the gold, we're actually buying a Krugerrand, which is really the gold price plus 4%, because that's what it costs to actually manufacture that.
And then you've mentioned now in terms of at the beginning that there is almost a guaranteed buyback if you want to sell your gold. So I assume it is relatively easy to sell gold, and it is a liquid investment.
Yes, no, it is. You're so right there. So because of the backing of the South African Reserve Bank, they are the buyer of last resort. So there's never a question of liquidity. And I think that's very important. You don't want to buy something that you can't sell or get rid of in a hurry. And that's the idea of Krugerrands. So whether you're traveling overseas and you arrive at American coin shop, he will recognize the Krugerrand straight away and give you the cash equivalent in dollars. So it really is an international currency that one has when you have a Krugerrand.
And then, David, you've mentioned also now that with gold, you do not receive any returns in the form of interest or dividends. So your biggest value is actually in the capital growth of the investment. But maybe you can also just share with us in terms of the tax implications. How does that work?
Right. So as you correctly said, there's no interest, there's no dividend, so therefore there's no tax or income tax on any possible income. Then, of course, it is what's deemed a capital gain. And so typically there's two schools of thought. People would say, listen, it should be subject to capital gains tax, so you need to pay capital gains tax on it. There's also the school that says, look, it's money. If you had a whole lot of dollars that you kept in your bottom drawer and you went to exchange them with the bank, they wouldn't issue you with a capital gains certificate or anything like that. So yeah, I think it's just safe to say that it could be subject to capital gains tax.
Okay, so that is basically then the only tax that you need to take into account would be capital gains tax, basically on the growth in the price of your gold from when you've purchased it to when you sell it.
Right.
Okay, and then we have touched on it in terms of that gold is always performing well during a recession, or when the economy is not doing well, or when other financial markets are taking strain. But we can maybe just end off by saying, what would be the biggest reason for that? Because we've also seen now during this very difficult period with lockdown and the whole world economies taking strain, that gold was really performing well. So what is the biggest reason behind that?
So I think there's what we call fear. Fear is often a great driver of markets, whether it's for individuals to sell their shares and get out of the market, or it's fear that I might lose everything that I've tried to build up. So gold is known as a safe haven. It's the ultimate store of value. It's been tried and tested. Gold has been with man since the beginning of creation. Just aside, gold is first mentioned in the Bible in the book of Genesis in the 2nd chapter. Both 1st and 2nd chapter are an account of creation. But where the 4 rivers came together, which is the Garden of Eden, the Tigris and the Euphrates River, the Bible says there was gold and gold was good. So I think if God says something's good, then you know it's actually very good. So that is for me an indicator of, if you want to invest in real money, not just currencies, but real money, one should be investing in gold, and not just by fear, but actually doing what's right. Saying, if God says something's good, maybe I should be tuning in and doing likewise. So my passion really is just to help investors acquire a little bit of gold. So my office is always open. I'm always ready to take emails or respond to prospective investors to try and help them and guide them on how best to acquire some gold.
Okay. David, thank you so much for joining me today. It was really interesting talking to you because, like I said, we always hear so much about gold and gold is doing well and the gold price and all of this. But I think a lot of people do not have gold as part of their investment portfolio and should definitely consider to add that because of the many pros and because of the reasons that we have been discussing today. So I am going to share your details if people want to get in touch and want to discuss it with you further or want to really get into investing in gold. But I want to thank you for spending some time. Thank you for educating us about investing in gold. And thank you for sharing your passion with us.
Ronel, it's been a big pleasure, and thank you again for the opportunity. Trust your followers and listeners that are going to do well with a good diversified portfolio.
Absolutely. So thanks a lot for listening. I hope you've enjoyed it. I hope you've received some value, and I will then see you again at the next Ronel Talks Money Show. Thank you and goodbye.